Hello, Warriors. Coach here at TradeGateHub.com, powered by TradeView Markets. I want to start off with the euro. A lot of my followers and viewers know I've been looking for a bottom in the euro for the last few months. I thought originally we were going to hold 110, but since then, we went to 108, and I talked about the weekly divergence and the throwover of the falling wedge that we had. And so, this action's pretty impressive. Uh, if you weren't long euro, perhaps you took me seriously at 61.8 back on euro pound down here around 83. So, up about 170 pips and trying to hold a breakout over 86. But I really want to dig into the euro because what could be happening here could be very significant. Remember, we were talking about on Monday that we could have one more new high. Okay, some people are going to hold out for that. I've learned in my career when it negates a breakout, and this, let's call this was the breakout. And what I believe happened yesterday was a truncated fifth wave failure. They're very rare. They don't happen. But you have to be willing to change your mind. Just because you're looking for new highs before the market began to sell off doesn't mean that your narrative is going to play out. So you have to be aware of price action. EG was the first signal that the dollar was turning because EG had been heading down forever with cable strength over euro. All you have to do is look at a weekly here. See, we were going down for quite some time since basically 2020, since COVID. So you could see why I'm so constructive here, and that once we pass these, that I think 87.5 is a good target. But back to the euro, and let's talk about what's happening here in the wedge now. So after we had this throw under or throw over, whatever you want to call it, because I'm not just going to provide market calls for you guys. I want you to learn the hows and the whys so that next time there's a technical setup like this, you know how to trade it. Okay, so we never took out the weekly divergence, held above 30 when we went to 108, okay, and quickly reversed off that. There were, some signals over the last few days where, pound, I said I thought would make a new low. I thought we'd take out this 130 low. It's still possible that it could happen with a pullback in euro. Cable will still remain when you think the dollar is going to rally. Cable's the preferred short. When you believe that the dollar is going to sell off, the euro is my preferred long because I think EG still has a long way to go. But I want to talk about this wedge now that we're inside of it. So if you were accumulating here after the second attempt to close back inside the wedge, so we had one attempt, couldn't even hold it for a day. Second attempt, it held it for a day. And here's the third attempt. We've already held it 2 days. And now instead of having to risk 108 for a long-term position in the euro, you can move it up to 110. We shouldn't close back under, say, 110.20, 110 even. That would negate the beginning of an up move. So, where do we go next? And I'm not saying we can't pull back and retest, but the next important area is this 1280 back here. This is when I thought that we would make the move to 110, which it overshot. But this is going to be a big level between 1280 and here's the wedge line, okay, coming in around 113.13. You're going to have resistance levels all the way up, but if you're a believer in technical analysis and you have defined this as a falling wedge, wedges can retrace 100% of the prior move. So the longer term targets up here are 120. You could take a look at maybe even let's get out the Hubble telescope here and look at the monthly. We're having a pretty dramatic reversal month from where we were at the beginning of the month. And if you want to really start talking about a bearish scenario, bullish scenario, look at this. This was the low. back in 17. This was a higher low. This was, you know, the 107 level. We never took this out at 108. So we're working on the third higher low going back to 2017. That's long term. And then if you just take a straight line across this 123 level and you measure it from the lows, which were, what was it, 103, that's 20 cents. You start closing over 123, you're heading up into the 140s or so. So this could be the story of 2022, could be the turn of the dollar and the beginning of a fairly serious bear market in the dollar. I mean, in bull markets, anything that can go wrong doesn't. And in bear markets, everything that can go wrong does. And I wouldn't be surprised with all the geo stuff turning into a financial mess with weaponized SWIFT systems. And, you know, I think there was even a senator that put out a tweet or said in Congress that, you know, all foreign countries, I don't know why U.S. Senator would say this, but all foreign countries should have their gold sent back to them from the U.S., you know, before it's frozen. So anyway, this could be a major turn in the dollar. So, you know, if you're looking real short term, you're going, wow, we've been in such a bear market. But here's the other counter argument. We've been in a very long base. We've been in a 7-year basing period, 7 years of plenty, 7 years of naught. And isn't it ironic that we're putting in a low, if this low holds, when the continent of Europe is being threatened by Russia? Because sentiment wise, and if you're just being logical, oh my gosh, I don't want to buy a euro because you know, Putin could you know, end up just moving forward. There's more exposure. Also, European banks, they have a lot of Russian exposure. We're not hearing about that much. I think there'll be things in the third quarter that'll start popping up about, you know, what the implications are of the sanctions and how it ripples through European banks with Russian exposure, IMF loans, etc. So, you know, this is still just the beginning of the story. In fact, you know, people came in pretty positive that, you know, Russia's pulling back troops from Kiev. And then there was a flash that Zelensky says he's bringing in new. So it's going to be a tough environment. You know how they say in the stock market that markets climb the wall of worry. Well, you can't find a bigger worry than the potential for World War III and owning the European currency. That you can't get much more contrarian than that. So this is my longer term view. We now can move up our stops to really a riskless position of closes back under 110. As I said, cable's not my preferred long. Maybe cable rallies up to 33. I'm not sure that it's bottomed yet, but close enough. If this is a higher low, I don't really want to be fading the dollar in too many cases. I am in just one case, and I'll show you in a minute. US dollar yen, we talked about that it was the fiscal year end for the yen. What a tremendous blow off move. I'll go out on the limb and say, you know, maybe we get another shot up here in the end. I can't short it, but, you know, I actually think, even though they're talking about 10 zillion rate hikes in with the Fed coming up May 50, June 50, that some of this action that I'm getting here in the 10-year says at the minimum 250 that we could have some type of breather here, because there's a weekly, we're actually lower on the week. You know, we could pull back to 2%. That's actually where we gapped up. That was a Monday that Powell was super hawk. Okay, so you guys know what I think in EG longer term, 87.5 on that. So you guys know that I turned pretty negative on copper All right, it was this week, and we're trying to recover. Copper's trying to recover, but this really looks corrective to me. So what would be the play in currencies if you thought copper might head down and, you know, in fact, this looks like a pretty good high it's putting in today, and trade back down, say about 20–30%. Yeah, I'm wrong over $5. What would be the currency that would be most affected by a decline in copper? And I'll give you a hint. And it's not China, but it's affected by China. So it's the Aussie. So the Aussie's momentum seems to be slowing a bit. So, you know, I'm not heavily short, but I'm taking a shot here on the short side of the Aussie dollar because I do believe that copper is peaking. I also think a fundamental factor that could come into it is, you know, China's in lockdowns in Shanghai. And if there's more spread of COVID, which, you know, probably started with the Olympics being there, and their zero tolerance to it is what they start locking down more cities. That could also be a bearish argument for the crude too. But Aussie, I'm taking a shot that we could get a correction that could take us all the way back down to this is really the breakout. So just like 110 is the breakout in euro on any pullback, and this would be my target for a counter trend short, is around the 73.20 level. So risking 65, looking for 180. Here we go in the dollar. Again, we came so close, and we still can. We're on the verge of a breakdown here, right? The descending triangle. We had the false breakout. And if this is happening here, we're headed down towards the next support. It's going to be around 95. Right in this range, right in this range. So the dollar top that I've been waiting for a long time and started probing it in here, as W.D. Gann said, if you don't learn how to change your mind, you won't have any change left. Monday, I thought we might go to par, and we started selling off. Euro started acting good. EG was exploding, and I go, you know, we don't have to go to 99 to par just because there's a wave count there. So the action turned negative the day after, and now it looks like we're going to have a little bit of a dollar breakdown. There still are plenty of dollar bulls out there, and it's going to take a while for sentiment to drop to where there's more dollar bears and dollar bulls. So if you think you're late, I don't think you're late. It's really just starting if you look at a weekly, right? And look at the week we're having. It's one of the worst weeks you can have. Inside week, right? Early in the week, we took out last week's high. Here we are Wednesday, taking out last week's low. It's an outside bearish engulfing candle, and looks like next stop could be down around here. So dollars breaking. What's that going to do for precious metals? So I did say on Monday and last week that if we had a break to 24, people would buy silver at 24 because I had the confluence of moving averages down here. Low is 397 before we had a real nice bounce yesterday. So the bull case for it to hold, you cannot take out this low in either gold or silver. Look at what gold held, a 50-day right back to major support. Gold's going to have trouble. Can we have a continuation move? Sure. This was, I think, only halfway back. We could rally, you know, 61.8 back or so. I'm not looking for new highs right here. So I think there's more of a likelihood of a breakdown. And, you know, you don't have to be a hero and try and catch rallies and fade things and fade weakness and do those things I do. You can just wait. And just like wedges, I mean, for pure signals and waiting for confirmation, you have to be short gold under this line, or at least out of your longs. And you need to be out of your longs in silver under yesterday's lows, because just arithmetically, 24 to 27 is $3. So that takes you down to 21, which would be new lows under these 2130 level, and that would clean out every last silver bull. So yesterday's lows, very important in the metals. Everyone with me? S&Ps, I think that we're now entering a zone where there could be some supply up here. I just interviewed someone who said the S&P is always want to take things to the extreme. So 61.8 definitely wasn't enough to stop this advance. Here's 78.6 up here at 46.69. And I think, about 47 or so is the 88.3. And S&P's love to almost, make it look so bullish, like it's going to be a layup to new highs and then sometimes turn. So I'm not getting bearish for a collapse in the market. I'm just saying that it would be healthier if we pulled back. Here again is the wedge. See how these wedges are great signals? So if I believe in the wedge here, eventually we're going to make new highs, just like if I believe in the wedge in the euro, we're going to trade 122. So these patterns are popping up. So I do believe that we're going to go to new highs, but I think it'd be healthy for a pullback maybe to 4,400, 43, something like that. Some type of consolidation. This has been one of the fastest, so you have to call this impulsive. This is definitely not a corrective move. It's impulsive. It got from point A to point B in a heartbeat, compared to, this action or this action. This was pretty impulsive too. And we did end up with a new low. But gosh, I remember when Mike and I were talking back down here when you saw huge volume coming in. I was thinking we could get here and see if we had a breakout, but from the breakout, it never looked back. If you believe in wedges, S&Ps are going to make new highs. Just want to cover oil a little bit because I was looking for a failing rally in the crude oil. So far, there was a nice break from the 61.8 level here. It looks like we're going to make another move to the upside. The billion-dollar question is, are we going to retest these highs, or is it going to be a failing rally? Right here, it's an I don't know. And I don't have to know where every market's going. Trade the instruments that you have the most conviction, best profit risk ratio on going forward. So the bond market, TLT, everyone hates bonds. And like I said, we're getting a little bit of a pullback in yields. I think there could be more, maybe back to 2%. We'll take it a step at a time. Wanted to show what was happening. Tilray really didn't give back much. Okay. I'd still like to buy it cheaper. And Aurora looks worse. Tilray has pretty good structure. I'd buy a break in Tilray if I had a chance, say, around 650 or something, $7, something like that. So I'm looking at that. The gold shares are still acting good, like they want to make one more high. There will be divergence at new highs. We have confirmed highs. So we'll see. What's interesting and what long-term is positive about how the miners are acting is see how close to new highs of the rally we are in things like, GDX and Newmont. See that? We're almost at new highs in Newmont. And look how far away from new highs we are in gold, right? It's almost like, do these two belong together? But that is a long-term positive for gold. So, I mean, even if we get a huge break in gold, the shares are going to be a great buy if that happens. And I'm talking about even if we see 1,600 gold, which I know I'm going to get some hate mail, but you know, we first start taking out this, measures 200. So that's going to take you to 17, right? And here you go, here's 1,600 gold. And that would be something like this with a little bit of a fib extension, which doesn't make sense to me when I'm looking for a bear market in the dollar. So anyway, that's what I'm thinking right away. I lean more towards, even if there is a continuation rally, that this was an important high in gold. I know a lot of people think it's only a question of, it's not if, it's just when. But be very aware of this. This is going to change the picture. I actually have better cycles for longs happening in the July timeframe. And when I was talking to Mike, most of his calls have the June expiration, so he's constructive into that time frame. So when some of my work lines up with a trader like Mike and what he's doing and how he selected his call expiration month, gives me even more conviction about the cycle. So I want to invite you guys to check Mike out in an hour and 10 minutes. Tomorrow I have an excellent interview with Francis Hunt at the Market Sniper. Last time I interviewed Francis was right before the invasion, and I thought he was aggressive. He was long US dollar ruble, and he was looking for 90. So I talked to him. He was live in Panama. He was long gold. Guy makes really outstanding calls. He's a veteran. He's been around for a long time. I'm going to ask him about his journey in market psychology a bit, and then I'll pump him for a few ideas for our community. So I welcome everyone to join us here, and Mike will be on in an hour. If you like what we're doing, our mission is to build up and edify traders every day we're on the air. Hope this did it for you. Hit the like button, subscribe, and most of all, come on in and interact with us. That's a wrap. Remember, don't just count your pips, count your blessings. Adios. Tune in for Mike in a little over an hour, and I'll see you with the Market Sniper tomorrow. Again, Dale Pinkert with TradeGate Hub, powered by TradeView Markets. Adios.